All right, good morning, everyone, and happy Monday. Welcome back. Let's do a quick sound check. What's up, Mirza? What's up, Lorna? Good morning, Andrew, Renee, Peter, and Charles. All right, folks. So should be a pretty interesting week. Looking at the QQQ here, we have that special rebalance on the NDX going into effect today, which might be a total non-event. Fun part is we're about to find out. But you do have the special rebalance, and then you got some earnings coming up this week. I believe this week is Meta, Microsoft, and Google. And then next week you get your Amazons and your Apples. Now looking at the chart here, the Qs might be one of those things where before this goes higher, and we're ripping through the highs here, maybe has to come a little bit lower. The weekly chart looks fine. The daily chart looks fine. What I am seeing here heading into this week are a couple problems on the lower time frames. Again, none of which would suggest the Qs are going to fall apart. But maybe a dip down to 370-ish. I would love to be a buyer down at 370-ish. So if you check out the hourly chart, momentum breaks negative, structure breaks under the 21, under the 50. The 21 crosses through the 50. Never good for the bulls. And now we're cranking out an hourly sell signal. Again, could be one of those things where you're coming down towards an hourly 200. And then from there, you look for some support. You look for things to stabilize, and then maybe you take it higher from there. But for me, a little bit more so, it's just kind of the fact that none of the pretty colors or the pretty setups are in the tech names or the semiconductors right now. It's energy, financials, healthcare, and XLP. So admittedly, not the sexiest of names, but that's where the good setups are. So I got a handful for you here. One that we're long right now in the mastery is Walmart. So Walmart sets up in a nice daily squeeze. Big threes bullish on the weekly, the 4-hour, 2-hour, all the way down to the 30. So that's what we're looking for. You have a squeeze. Squeeze just tells you it's gearing up for a push. The indicators can point towards path of least resistance being to the upside. Pretty good chance that squeeze wants to fire long. So we're looking for 160-ish. And what you might look for here, they might just push it right to 160-ish. But notice here on the hourly chart, you get the big rip. You haven't had a back test of the hourly 21. So they might keep the push going, or they might give it one more back test. A little bit of a flush down to the hourly 21. And that, I think, is actually a nice spot to try to reload, and then see that squeeze fire to the upside from there. I'm not going to complain if we're taking out 160 today, but I wouldn't complain about buying a little bit more, down at an hourly 21. So Walmart is sitting pretty. And next up here is Pepsi. Now, I'm a little bit late on Pepsi as far as a great entry. To try and catch this daily squeeze, potentially the good news, though, potentially being the keyword, squeeze hasn't fired long just yet. So that daily squeeze is still going through that compression phase. What I would love to see is before it fires a squeeze, kind of like Walmart, one more kickback, one more flush to the hourly 21. And then you're looking for some support. You look for things to stabilize. Say you get a flush like that. Support comes in. 5-minute chart cranks out a fresh buy signal. The 15-minute chart pumping out a fresh buy signal. Then you look for the turn higher. The turn higher that should then go on to trigger that daily squeeze. So I would love to buy a dip in Pepsi. And then, for a few of these where it kind of gets tricky is earnings. So, like Procter & Gamble, for example, they have earnings on the 28th. 28th is that's this Friday. So it's a little tricky where if you have, say 2.5 weeks until earnings, I think that gives you plenty of time to come in, find that squeeze, and then try to play for that squeeze to fire long. When you're 2, 3, 4, 5 days from earnings, it can work, but to me, it does feel like you're cutting it a little bit close. But putting earnings aside, one of the better looking daily squeezes in the market, the old Procter and Gamble here. Big 3 checks out. So yeah, pretty straightforward. It's a personal choice. If you want to try to play for these squeezes 2, 3, 4, 5 days from earnings. Also a personal choice if you want to say, hey, I like the squeeze. I'm going to buy some calls here and actually sit through the announcement. But it is a nice setup. Next up is PLD. And check out the squeeze action on this puppy. She's squeezing. Weekly chart, the 3-day chart, the 2-day chart, and the daily chart. Then one thing that I'm building out here for this big 3 squeeze, I've got this label right here that says big 3 squeeze entry zone. That's basically the green light. You have a squeeze, you have the big 3 buy signal, and you're at the buy zone. The kind of thing we can get busy with. So this is a nice one where the daily chart has the green light, the 2-day squeeze, you got the green light, the 3-day squeeze, got the green light, and the weekly squeeze. You've also got the green light. So there's 1, 2, 3, 4 time frames. And mind you, they're bigger time frames. It's not a 2-minute chart, a 3-minute, and a 5-minute. The daily, the 2-day, the 3-day, and the weekly, they've got that combination of a squeeze, the buy signal, and they're sitting there at the buy zone. 4 green lights at once. Now, admittedly, I've got no idea what PLD does, but that is a nice setup. So if the options are healthy enough, as far as the spreads, as far as liquidity, I do think one of the cleaner picks. Next up is Freeport. The nice thing about Freeport is they already had earnings. So therefore, we don't have green light chart, the squeeze, the signal, and the entry. And that daily squeeze is nested inside of your weekly squeeze. So from there, that sets up the potential for that domino effect. Daily squeeze fires long, gets a good push going, weekly squeeze fires long. Pretty good stuff. So Freeport and then Lulu. So one thing that I do notice here, the daily squeeze is technically fired long. They're not doing too much with it. Usually by the time the squeeze actually triggers, you do look for a little bit more of a directional move than that. So food for thought there. But what I do like is the squeeze here on the 3-day chart. That one looks poised for a nice push higher. And then last but not least here is FAST and LYB. Maybe a little bit early here for FAST. But I do like the pattern where you print the squeeze fires, back test of that 21, brand new squeeze. So kind of like a bull flag of sorts. So FAST isn't too bad. a little bit neutral for now. And then lastly is LYB. A lot of squeezes here. From a 1 hour chart all the way up to a weekly chart. Daily squeeze has the green light. The 2-day squeeze has the green light, as does the weekly squeeze. So my favorites here are probably going to be LYB, Freeport, PLD, Pepsi, Procter, and Walmart. I got a few more here. Like McDonald's, not a bad looking squeeze. They have earnings on Thursday. If I'm trying to play for a push like that, earnings on Thursday feels a little bit close. So Walmart, Pepsi, Procter & Gamble, Freeport, Lulu, and LYB. And then if excuse me, if you are trying to play for the Qs to push higher here, I think you want to just watch the hourly structure for now. If they can come on up here today and clean things up, and it's not going to be the easiest, but if they can push this back through, say 380, back above the hourly 21, back above the hourly 50, cancel out the sell signal, get some fresh buy signals, then that might be all she wrote as far as a flush lower. But I think to the extent you look at the hourly chart and you have a sell signal, that's the target down yonder, 370-ish. So that's what I got for you guys this morning. Any chart requests, anything you want to take a look at, throw them on over. Let me see what you got. Let me see what you got. Futures are pretty quiet. Let's see, any squeezes here on the futures? S&Ps, we have a 5-minute, 15-minute. You actually got a good few here. So I love the squeeze on the futures at the open. From there, that can kind of serve as your compass for the first 10, 15, 30, 60 minutes. So something like this where the futures have a 5-minute, a 15-minute, a 2-hour, and a 4-hour squeeze. The first one to fire long or short here is going to be the 5-minute. So I think you drill down to a 5-minute and you watch that squeeze. With the understanding we have other squeezes, and with the understanding one squeeze firing can then trigger the next squeeze, and next squeeze, and the next squeeze to do the same thing. So if you're bullish on the S&Ps for today, your ideal outcome is the 5-minute squeeze fires long. That triggers a 15-minute squeeze to fire long. And then, so on and so on. 5-minute squeeze fire short. The 15-minute could trigger. That could put some pressure on the market to the downside. So a couple squeezaroos there on the S&Ps. ES rather. And then the NQ. Squeeze and a sell signal on the 5-minute. A 15-minute squeeze and an hourly squeeze. So same concept. One after the other. All right. First up is Micron for the chart requests. Apologies, the charts are a little slow this morning. Not too bad. Yeah, look at little Micron. So 21 EMA here. The launching pad. Four-hour, 2-hour, and a 1-hour squeeze. And let's see if they got the green light. 4-hour squeeze has a green light. Squeeze, a buy signal, and a good entry. Inside of that, cocooned inside of that, you have the green light on the 2-hour squeeze. Squeeze, buy signal, and you're at the buy zone. And the hourly chart. So until that picture changes, that 21 EMA from the daily chart, that's a launching pad. And from here, what can trigger that push would be that 1-hour squeeze firing long, then the 2-hour, then the 4-hour. More importantly, as far as risk versus reward, you are catching it all pretty early. So I do like that. Notice down here on the histogram, momentum hasn't quite shifted back above the zero line just yet. If you get that positive shift, then I think you're really in business here. Very nice, very nice. So NM, as far as McDonald's goes, two things. One, I think I have some squeezes that are a little bit cleaner, just as far as buy signals go. But then for me personally, it's kind of cutting it a little bit close. If the goal is to try to play that daily squeeze and catch a push before earnings, that gives me like 3 days. Now, if McDonald's is sitting here and you had a buy signal on every time frame, like this thing's just like fully locked and loaded, ready to rip, all right, then maybe I take a shot 3-4 days away from earnings. But being that things are a little neutral, for me, the kind of thing where I'll probably come back next week, then see how the cookie crumbled. All right, Dave Wave has Royal Caribbean. Everything checks out here. It's just, earnings. You have a good trend. You have a good structure. Got a brand new daily squeeze. We got some buy signals on the big three. To me, the question is, does 3 or 4 days give me enough time to see that daily squeeze go on and make the move I'm looking for? So the structure is there. It's just a matter of, personal preference. Is that enough time? But a good-looking chart. Good-looking chart. Rock 22's got some Starbucks. A lot of progress being made here. It might not look like it, but a lot of progress being made. They've canceled out every sell signal. So I'd imagine back here, we probably got a sell signal on every time frame. So they canceled out every sell signal. Now you're getting some buy signals coming in. Momentum is back above the zero line. And the structure improves. You're back above all three of these key moving averages. So they've improved things here. Now they need a trigger for a push. The trigger for that push might be this 4-hour squeeze, which looks like it wants to go for it. So that's what I would watch, the 4-hour squeeze. Making good progress, though. Chris in Chicago, thoughts on Salesforce long? So for me, it's reached a point where I would have to be long with the understanding I might have to sit through a flush down to 220-ish. And if anything, that's actually the spot where I really want to take the trade. And I say that to say the squeeze here is already fired. So if you view the market through the two phases of the squeeze, right, compression and then expansion, well, this compressed and it's already expanded. It squeezed and then it fired the squeeze. And that initial push out of the squeeze once it fires, that tends to be the easy part of the move. Not to say the party's over, but from a squeeze perspective, squeeze prints, squeeze fires, everything kind of works back down. You get a brand new squeeze, then the squeeze fires and gives you continuation. Just continue here. But I think based on the structure here, not a terrible thing if it does pull back a little bit. And then on the big three signals, no huge problem. You're not, loaded up with sell signals, but you're also not loaded up here with buy signals, which might be an indication it's a little bit tired. Gotta come on back home, and then you try to reload. It's a great looking daily chart, though. So the overall thinking should be continuation of this trend. Very solid. My man Ben in Puerto Rico has got some Mara. Did it pull back yet? Oh, a little bit. Thank you for calling this one out. So mark up that 21 EMA. And then the general thinking is just that you had a squeeze fired. Now you're kind of working back here to the buy zone. And now from here, we need a trigger for the next push higher. That trigger can happen in a couple different ways. We might pull back to the 21. We might chop there for 1 or 2 weeks. And then we might get a brand new daily squeeze. Or we're kind of hanging out here. We get a squeeze on a lower time frame, and then that triggers the next big push. But to me, that's kind of the overall thinking. It made its first leg to the upside. Now you're kind of sitting through the first kickback, the first chill pill. Now what can I anchor to as far as a trigger for that next push higher? For me, one to definitely keep an eye on, though. So structure here is perfect. It's just more so everything from a 5-minute chart up to a 4-hour chart has gone from being, super bullish, just spitting out nothing but a buy signal, to a little bit neutral. So you have the bull phase, you got the neutral phase. Now from here, everything might crank out a sell signal and we might roll over. Or everything prints another buy signal and off we go. So one to watch, I think. Okay, PLD is an industrial real estate. Okay, it's a REIT. Yeah, see, never would have known. Never would have known. All right, a few more here. So for Boeing, the whole question for me on Boeing, weekly squeeze. Not a question so much, but I guess the focus here is a weekly squeeze. It looks like it wants to explode. And where this actually gets a little bit juicier as far as a good setup is all those nested squeezes inside the weekly squeeze. So if the daily squeeze can fire long, that can trigger the 2-day, that can trigger the 3-day, and then it could trigger the weekly. So a recent example of this would be Netflix. coiled up in a weekly squeeze. And then inside of that weekly squeeze, the 3-day time frame, the 2-day time frame, the daily, the 4-hour chart, the 30-minute chart, everything was squeezing. So then one after the other, the squeezes all fire. And that's how even a name like Netflix, a bigger name, can go from 300 to almost $500. So I think potentially there's some of the same action maybe setting up here for Boeing. I love the weekly squeeze. And, I think we'll all get a little smarter here this week as far as what do we do with Boeing. The 26th before the open. So, yeah, ideally Wednesday afternoon, we'll have a better idea here. But mind you, that knife cuts both ways. Earnings for Boeing could be so atrocious. Daily squeeze could fire short. And then you could see that domino effect to the downside. But man, I like the weekly for now. Peter's got Lily Bell. Good trend, good structure. And a really nice squeeze here on the 3-day chart. If we continue to see some of this rotation that we saw last week, this is the kind of thing that should work nicely. Now, healthcare is a little bit stretched, so maybe we see some sort of dip first. But from a squeeze perspective, the squeeze just fired. So if the daily squeeze here in XLV does lead to more continuation higher, things like Lily should continue to perform. So I'm a fan of that one. Freddie's got AML. Pretty good gap down. Excuse me, pretty good gap down from earnings. Me being me, I think the thing to watch here is that 2-day squeeze. Now, on my indicator, the difficulty here is trying to call for direction out of that squeeze. We can take PLD. And that squeeze having a buy signal, all the other time frames having a buy signal, to me, that all makes your job of it makes our job of calling for direction a lot easier. The difficulty of ASML right now is the neutral nature of it. Daily chart is neutral. No bull squeezes, no bear squeezes. Kind of a toughie. Yeah, I don't see too much there. Sometimes after these earnings gaps, they can just they're sloppy for a bit. So not one that I see too clearly. Triple M. Yeah, these are the things that should work if we keep seeing that rotation. Earnings are tomorrow morning before the open. So for me, that's when I would check out, tomorrow afternoon versus, try to catch for a push today or sit through the announcement. Come on back tomorrow, see how she settles. Rodney has HRL. It's one that you watch for that domino effect. Daily squeeze, a 2-day squeeze, a 3-day, and a weekly. So then take whatever your path of least resistance indicators are. Whatever tools that you use to gauge momentum, whatever tools that you use to gauge structure, trend, what you want to see on your path of least resistance tools is everything shaping up for a push higher. So whatever you would deem to be a buy signal, so to say, if that 5-minute, the 15-minute, the 30-minute charts, if everything from the ground up can give you your buy signal, then there's a good chance you're going to see that squeeze trigger to the upside. And then vice versa, if everything gives you your sell signal. So to me, guys, that's become a huge part of trading the squeeze. It might be a squeeze on the weekly chart, it might be a squeeze on the daily chart, but the trigger and the confirmation, everything from the ground up. And all you're searching for is that moment in time where everything's aligned. PLD being a pretty good example. Got a bunch of squeezes, bunch of buy signals. Everything's generally lined up here. Everything's pretty much on the same page for a push to the upside. Doesn't have to be this indicator, of course, but that's my advice as far as the squeeze goes. Take your indicators and then try to build out that what things should look like. And that's where I look at a name like ASML. It just doesn't fit that template. If we go back and look at the last 50 to 100 trades I've taken, they don't look like that. Nothing to do with ASML, just everything to do with the setup. All right, guys, a couple more here, then I got to jump into the gold room. Take those animals through the open. MOS. Nice. Doesn't mean the trade works, but I can call for direction. I've got 1, 2, 3, 4. I got 6 squeezes. And not a sell signal in sight. Doesn't mean the trade works, but at least at the moment, you have compression and you have alignment for a push higher. So Mosaic is a pretty clean one. But all right, my friends, I got to let you go here. I will be back later today at 1 p.m. Central. So for those of you in the free room, I will see you then. And then for those of you on YouTube, as always, check out the free room. I'm in there a few times per week. Henry's in here, Sam is in here, the whole gang. So I'll be back around 1 p.m. Central. And, usually a good time to kind of run the scans, talk a little bit about the day's action, and all that good stuff. So thank you for your time this morning, and I'll see you guys this afternoon. Adios.